We mentioned earlier about the Times Free Press article, front page article on interest rates from June. We were interviewed along with some of the other mortgage originators in Chattanooga. We had some of our customers actually quoted for that article. The Times did not give us credit for them being our customers, but they were our customers nonetheless. Tina and Vicki, let me just ask you a question. What's happened in the rates since June's article?
Actually, the rates have dropped.
They've even dropped since June.
Yes, they have dropped since June.
So the Times Free Press put out an article in the middle of June about how great the rates are, and they've actually come down since then.
Right.
Wow.
I had a borrower that was actually quoted in that article. At the time, he had closed on a 15-year fixed-rate mortgage at $399, and I just locked one yesterday on a 15-year fixed at $375.
Yeah. I want to say one thing about interest rates. We're going to probably, since we're talking about interest rates, we'll have to mention some interest rates, and we need probably to talk a little bit about notes and APRs because the government wants us to make sure we quote APRs. So just kind of on a 3.99 interest rate, the APR would be in the neighborhood of 4.25. What is the APR, Tina? What do you tell people about APR?
Not to pay attention to it.
No, let's not say that. Let's not say that.
I'm kidding. That's the cost with the closing costs, their fees they're paying to get the loan. That's basically that deducted from their loan amount, and that's the cost of the money they're actually borrowing.
Do you calculate payment off of APR?
No, you don't. Your payment is strictly calculated off your interest rate.
So it's an indication of what the additional closing costs are, and it gives you some ability to compare two different programs or two different lenders. That's a way to compare closing costs.
If your APR is way high, then you need to question your closing costs.
Okay, way high. But anyway, we'll try to throw in some APRs just to stay in compliance. We don't have that calculated, but Vicki's talking about some 3.99 rates she did and 3.75 rates she did. Those are the note rates, not the APRs.
Exactly.
And those were on 15 years.
15-year fixed rate.
Correct. The rates that were around when the Times Free Press article was on the front page news about interest rates, they were around what high?
They were about 4.5%, Richard.
4.5%.
And I actually had a customer that at that time bought a piece of investment property for 5%. And investment property rates are typically a bit higher than your primary residence, so he was very happy with that. It's a good time to invest in those sort of things. He was happy. He wanted to use his money for his investment and bought a piece of property and is using it for rental income now.
I think in the paper he talked about he was able to cash flow his property better. We're going to talk a little bit about how interest rates can benefit customers, and not just refinance customers, but also purchase customers. And I think it's important to understand the impact that rates can have. Welcome back to Real Estate Radio Chattanooga on 102.3, the Talk Monster, each Saturday from 3 to 4. I'm Richard Smith, your host on Real Estate Radio Chattanooga. I'm with Tina Christine and Vicki Phillips, top local mortgage experts. We're talking mortgage interest rates, how homeowners and home buyers can benefit from today's low interest rates.
Welcome back, everyone.
That's Vicki. Tina?
I'm here too.
I think we left off with me being old.
And actually, while we were gone, Richard was back here playing the air guitar. It was a little scary.
Well, I like the Eagles, I could say. And he kicked off with Led Zeppelin. That's my band, Led Zeppelin. Speaking of bands, I'm hoping the rain tonight is not going to knock us out of Riverfront Nights, is it? Nathan, what do you think?
No, the rain's over, huh?
The show must go on. Nathan in the background.
Absolutely. We're so fortunate to live in a town that offers, so many great free events.
Free is great.
Free is great.
I was there last night. I had Gabriel with me, my grandson. He doesn't let you listen to plants and animals. You don't really listen. There's too much to do. So we walked around and introduced ourselves to new people, and they were criticizing me for probably letting him wander a little bit and have fun.
Yeah, I've seen Gabriel down there wandering around. I've seen videos.
I try to find close. I know.
Are you nearby, I hope?
Hey, they were good, though. That band was good last night. From Canada, I think they were. I love that, and I can't wait. I'm going tonight. Tell you right, I'm going tonight.
What time does that start?
7 o'clock.
Okay.
Is that right?
Yep.
All right, Nathan. Nathan's there checking me up. Definitely listed. All right, we're talking interest rates and how old I am, and evidently I'm with the school that you want to shorten your term and get your home paid for. I still think that's a valid choice. Vicky's talking about using cash flow to improve your your investment.
Create your wealth.
Create your wealth.
And a lot of folks like that tax write-off every year, their interest.
If you're tax writing off that you're spending the money, I know we need an accountant here to talk about that.
Yeah.
Well, another point of view on that, though, that I've heard, if you have your home completely paid for and you lose your job and you haven't grown a nest egg somewhere, you cannot go out and pull equity from your home without a job.
Yeah.
Good point. Good point.
Because your mortgage loan is basically a loan against your income. It's not technically a loan against your home. So if you don't have income, you can't get a loan, and you're stuck with a house that's paid for and nowhere to
borrow money.
liquidate your assets.
Good point, Vicki.
I really didn't want her to come today.
Oh. And there are several different experts that have varying opinions, and I'm not saying I'm pro that opinion necessarily. It's just an altering opinion.
The thing is, you have to have a plan. The real thing is that you've got an opportunity here right now today with these historically low interest rates to make a decision. And you know what? If you don't make a decision and act, the market's going to make one for you, because we've talked about how volatile interest rates are, and they will go up. The fact that the Federal Reserve pulling out of the market, the fact that those rates did not go up at that point to 6, that they've been trending lower over the past 3 months, does not take away or mean that rationale for the reason the rates are going to go up, that still exists, doesn't it, Tina?
It does. They could go up at any time.
And they will, because the Federal Reserve was buying hundreds of billions of dollars of mortgage-backed securities, and that buying power is gone. In fact, they've got some mortgage-backed securities that they're going to be liquidating because the federal government's not in the mortgage business. Well, I guess they are, aren't they? Federal Reserve. Fannie Mae and Freddie Mac, and we own them, by the way, I think. So the rationale that everybody said that the rates are going to go back up to 6, which is where they were, I think, back in 08. Let's see here. That's the wrong one. I think the rates were there roughly around 08. That's probably where it's going to settle in at. The reason, all it takes is some economic recovery, which we all really need. We all really need that. So Tina was talking about you needed a plan. You can have a plan to either increase your cash flow. What do you do with it is the plan at that point, or to shorten your term to get out of that house payment, to get out of that once a month house payment. Then if you lose your job, Vicki, you don't have to make a house payment. How to get that in. What about purchases? What do we've got here with purchase? Because now we've got these low interest rates. Let's talk about affordability. It makes a huge difference, these interest rates, and how much home you can buy. The other thing that we just got through talking about earlier is term. I'm a big term guy. I want your home paid for. I want your home paid for. I want my home paid for anyway. If you have a lower rate and you're satisfied with what would have been a $150,000 home, now your payment is going to be lower. So you can shorten your term. You can shorten your term to a 15-year loan maybe, buying the same home that you would have bought at a higher interest rate, or you can have a lower payment and invest the difference. That's an insurance thing.
Just in case you lose your job.
In case you lose your job. I actually think the unemployment was better this week because the new unemployment was not going up so much, but the folks are still unemployed. And Congress, going back to Congress, they passed that law again. Again, they're going to get unemployed people some more extended unemployment insurance. They sure take a long time to do stuff. By the way, early voting today.
Until 6 o'clock.
That's right. Let's vote. Let's vote. Get the political signs down. So we've got two things to worry about. We've got, if you own your home now, what can the interest rates do for you? And they can shorten your term, or they can improve your cash flow. And for a purchase loan, what can the rates do for you? Today, you cannot get a better opportunity to buy a home. And I don't know how to say that anymore, because rates will drift up. Even though the trend now is lower, rates will drift up, and that affordability is going to be less. You're going to have less of an opportunity to buy that great house or to buy a home and have that great payment. Today's the day to act. If you don't act, then like I said, the market's going to take that opportunity away from them. They'll make that decision for you.